Actually, some of the reasons, one was just no income. Again, as I mentioned, we're seeing a situation where the expenses are higher than income. So you might find someone has a willingness to save, but they just cannot be able to because they need money for their day-to-day expenses. That said, another trend that I found to be interesting that came out is customers are talking about fear of loss and also trust. So they were saying, hey, even if I save, I don't know where I can save. And when I save there, will my money be safe? So I'd say those were the two big trends that popped out in the report. And I do think that that is the opportunity that exists. So how do we help customers manage their money better and budget and plan? Then once they actually have the money, ensure that there is actually access for where they can make their investments, and those accessible platforms are actually safe for them. A trend that really stood out for me and was interesting is when we discovered that we have majority of Kenyans who are saying they want to retire by the age of 50, but only 17% of them actually have any savings in a retirement fund or are saving for retirement. I do think this speaks to the theme of this event, which is around financial education. And when we think about financial literacy, financial education, and especially in this time and period, then what does that start to look like? How do customers and Kenyans, actually general consumers, understand that I should be planning for the future, and these are the ways that I can plan for the future, the benefits of compounding, and so on and so forth. So that speaks to some of the gaps that exist in the market. That said, there are a lot of options in the market that are extremely safe. I do think the Capital Markets Authority has done an amazing job at creating more visibility of different investment options. The bigger question remains what I've been talking about, which is access. How accessible is it to your kawaida Kenyan? Where even if they don't have a smartphone, can they be able to access these types of investment options? And what are the barriers to entry? We've seen scenarios in the past where you could not save money or put money in a mutual fund if it wasn't over a certain amount. We're seeing those barriers to entry coming down, where we're saying if you have 100 shillings, you can now actually start to save. So I think those are the big opportunities.
There are opportunities, but we have also seen challenges. We see those challenges at the authority, and we are working through ways to, work with DCPs and other players in the financial sector space, to really close in on those gaps, especially gaps that would affect or violate the welfare of consumers.
Despite over 90% of the Kenyans saying that life is tough, that there are financial challenges, and we've seen even in the video, Kenyans continue to remain optimistic, just underscoring our resilient and entrepreneurial spirit. This tells us something fundamental. It tells us that beyond the numbers, beyond the constraints, hope remains a defining characteristic of the Kenyan people.
Last year we worked with the Office of the Data Protection Commissioner in developing two things: guidelines that help the industry to comply with the Data Protection 2019 Act, and in addition to that, a new code of conduct that was improving on our original code of conduct from 2019. Now, as a result of that, the Business Laws Amendment Act 2024 created a section in the law that would essentially give powers to the central bank to develop a code of conduct for the industry. And so that's what we want to do. We want to take part in that process. We think it should be collaborative. We think it should be both the regulator and the sector should have input so that we ensure we achieve the desired objective, which is consumer protection.